But let's bring in Shiv Puri, who's with us as well, founder and managing director at TVF Capital Advisors. Shiv, good morning. Great to have you with us here. Thank you for your time. You know, the tax bit just sort of watered off the duck's back, Shiv. Nothing at all. We've moved on, looks like. Yeah.
Sorry, I was just going to say, I think the budget as a whole was a very conservative kind of budget, more of the same, what we saw in the interim. I would have hoped for a slightly bolder budget in terms of spending. We have an economy that is very strong, and fiscal consolidation is, of course, important. But I wonder why we are focusing on it, so much when growth is pretty strong. Fiscal deficit projections in India are 4.9% of GDP. In the US, it's 6.5% of GDP for this current year. And India is growing at 7-8% real. The US is growing at 2 or 3% real. So I wonder if more spending could have happened to boost consumption, especially in certain pockets of the economy for the current year, given the backdrop that we have.
You're saying, sorry, you said you're wondering why we're so focused on the fiscal deficit, is what you said, Shiv? You're going to probably spend a little bit more?
Yeah, I think so. I think there's a lot of conservative assumptions that are being made in keeping that fiscal deficit under 5% of GDP.
Got it. And are there any market sort of implications of not spending more? I mean, I was sort of discussing earlier that rural spending actually is down for 5 straight years now. I mean, the allocation. There are different ways in which the money gets to what we call rural, but in terms of the printed number, the allocation is down. Yeah.
Yeah, absolutely. I think you'll see it in corporate earnings for the next couple of quarters. I think earnings are slowing down a bit. And you're starting to see that not only in the rural part of the economy, but you'll start seeing that, I think, slowly a little bit in urban consumption as well. So I think there could have been a boost that could have been made for consumption. And maybe it'll happen over the course of the year. Maybe it'll happen outside of the budget. I don't know. But I was surprised to see the focus on keeping that fiscal deficit number at 4.9% rather than letting that move up a little bit to boost consumption across the economy.
Okay. Shiv, hi, good morning, and thanks for joining in. I wanted to also understand your view on the real estate taxation from yesterday, right? In effect, the announcements yesterday are a positive for real estate because the LTCG applicable rate has been reduced to 12.5% from 20%, although indexation benefits are not provided. But do you think that in the longer term, between real estate and the equity markets, what is your preference now, given what we saw in the budget yesterday?
From what I understand, I think these are two very different asset classes and very different set of investors. So I don't think movements in taxes to the extent that they've been announced will necessarily result in movement of significant capital from one asset class to another. The profile of investors in these two asset classes is actually quite different.
All right. Hi, Shiv. Good morning. Tell us the themes you like then. When you joined last time around, we discussed some good quality hospital companies, some discretionary companies as well. What are the top themes you're betting on from here on?
Well, I wouldn't have thought that prior to the budget, one would say tobacco and gold would be the two areas that came out ahead. I'm not sure that is the right kind of takeaway, but that is sort of the two areas that have benefited. I don't think those are interesting areas long-term for a whole host of other reasons. But I think the structural areas in India still look good. We've talked about it in healthcare and hospitals, even financial services, as always. You're seeing it, in industrials, but certain pockets, and one has to be very careful out there as to what's cyclical and what's structural. I think those are the three kind of main areas that I look at. Consumption is interesting, but I think consumption is slowing and it's continuing to be slow. And I think even now there are certain pockets in the equity markets that are not accurately reflecting the slowdown in the real economy.
Shiv, since we're indulging, cigarettes as well as gold has got a bit of a booster shot. What about the alcohol beverage companies? United Spirits is up close to around 5%. Good, bad budget, good or bad days. people, they'll knock in a few, right? Either on the weekend or the weekdays. How do you view the space? And India is still an under-penetrated market.
I think one of the biggest dichotomies is looking at a top-down story without understanding maybe the bottom-up positioning. Alcobev, from a top-down perspective, looks amazing in a country like India. You have huge underpenetration, consolidation, and a culture that is increasingly still moving in terms of consuming alcohol for the first time. But I think on a bottom-up basis, from a regulatory standpoint, from the intensity of how business happens in that space in India, it's actually a very difficult space. And whether the companies do actually be allowed to keep the profits that they make over the long term, or a lot of that's actually given away in taxes and duties, is another matter altogether.
Shiv, you've been sort of big believers in banks and financials. That the top holding for you still?
Yeah, I think so. I think they still are structurally well positioned. Clearly, as the corporate capex cycle picks up, there will now be increasingly more demand coming from that side. I think retail is going to likely slow down for some period of time. There's been probably a little bit of exuberance in the unsecured personal loan, small ticket size category. And we will see, I think, in the next coming quarters, the asset quality get reflected over there, which will sort of, bring some caution to some of the lenders. But I think the corporate cycle will remain strong, and I think the long-term outlook is still that it's very underpenetrated.
Just a quick bit on taxation, since and does it change anything for foreign investors, Shiv?
I think it just makes it relatively less attractive as a market, and I'm not sure what purpose it serves. I'm sure they must have thought through why they wanted to do this. But I think from a relative basis, if you look at public markets, the long-term returns, are pretty evident in the sort of the 10 to 12% bucket for the Indian equity markets. And so when you start adding layers of taxes on top of that, relative to what other markets offer, it becomes less competitive. I was surprised to see the normalization between private and public, which seems to have happened in terms of the tax rate, because one would think, on private assets, your returns are higher given the liquidity risk. But now there's a normalization on taxes. Public markets don't offer that kind of upside, on a relative basis.
So in terms of sectors, in terms of, spaces that you would be optimistic on, Shiv, what are you looking at over the near to medium term? How does one approach the equity markets now?
I would think, generally a bit cautiously, right? The overall economy is doing fine, but you are starting to see, large pockets of the economy slow down a little bit. And we do know where valuations are, and I think they're pretty high. Generally across the board, I think it's still okay in the larger names, but at the smaller mid-cap names, it's head scratching to see some of the dichotomy in fundamentals and valuations. And we've seen these cycles before. I mean, over the last 20 years, it's happened 3 or 4 times. So I don't think the outcome is going to be any different. India has a few structural trends, which we've talked about, which is financials, healthcare, industrial consumables, consumer, etc. And I think one has to just be patient to ride it out in those areas.
One space that's caught everyone's attention in the last year or so has been the PSU basket. Some of them have run ahead of themselves. Some of them have run way ahead of themselves. But there still could be pockets of which have valuation comfort, maybe like some banking names, the bigger ones. How do you approach this basket? Because that's where the big wealth has been created. But has it run its course?
One has to really believe that there is something very fundamentally different in PSU banks for valuations and to move up from here. Because if you look at the historical cycle over the last 2 decades, these banks tend to trade at somewhere from half times book to 1.3, 1.4 times book. I mean, that's sort of been the range. It's clearly at the high end of that range right now. And so is there something fundamentally that's happened for these banks to change? Now, one would say that they're definitely better run than they were 5-7 years ago. And I mean, certainly from the trough of 2013-14, where asset quality issues across the PSU banks were so prevalent, I think all those days are behind. And the other area that I feel they've done pretty well is catch up on technology. They've also done, some of them have done a better job in gathering low-cost deposits. So, you know, they have some strengths that are built. I'm just not sure that there's anything that's re-architected their business to make it significantly more profitable going forward, and valuations are at the high end of where they've been historically.
Okay. Globally, you know, things have looked very good up until now, but there are some geopolitical risks. There is, of course, this big election that's happening. Now we've seen Joe Biden step out of the presidential race. Putting all of that together, do you see any global risk for the Indian market now?
I don't think that there is. I mean, there's always geopolitical risk. We've lived with geopolitical risk for the last many decades. One could argue that the peak of geopolitical risk last year has been crossed, but of course we don't know what could come down the pipeline. You know, from the global standpoint, if inflation in the West is under control, and that's a big question mark now if the Trump administration comes in. But if that does happen and you see interest rates softening, that is actually positive for emerging markets. I just think that the way both candidates have sort of announced their plans, and certainly under the Trump administration, spending is going to go up dramatically, and that doesn't usually bode well for their inflationary outlook.
Okay. Thanks a lot, Shiv, for joining in. Appreciate your time here on CNBC TV18. That's TVF Capital with their views on the market.